with those 2, bullish candles, you might call them, or these 2, up bars, you might be, tempted that, hey, this is a strong market. Usually 3 up bars in a row is a signal. And so how could we know that maybe there is some weakness? And so I wanted to turn our viewers on to some indicators. Now, the indicators that I'm going to show you guys, probably, let's start with the RSI, right? One of my favorite indicators, been around for forever. Um, I'm going to turn my RSI on here. Traditionally, the RSI is smoothed out over 14 periods, so 14 bars. But basically, what the RSI does is it looks back at the last however many number of bars. And again, the most popular is 14. It looks at those last bars and it kind of makes a ratio between the gainers and the losers, right? So if there's a losing bar, it groups them together. If it's a gaining bar, it groups them together. It figures out the average of losses and gains, makes a ratio so that you have this number between 0 and 100, right, on the RSI. And you can see here, I've got my scale. It's showing how on the S&P, the RSI has been living higher than the middle line. I've got some lines here. In fact, I can adjust those lines. Traditionally, these reference lines are at 30% and at 70%. It's considered a momentum indicator because it is comparing gains versus losses. But for us, what it can do is if we pay attention to, especially, this is a live bar. This is today's bar. And because we're in the middle of the trading session, it's moving around. Now, it's moving around kind of not as much as it has been moving around on previous days. But if you watch it very carefully over our show here, if we were to leave this on in the background, you'd see that closing price moving up and down on the daily bar. If we were to look, for instance, at a 15-minute chart, and I'm bringing that up right now, you'd see even more activity as each 15-minute bar lines up. Coming back to the daily chart, that means that this RSI line from yesterday's previous close is going to be flapping like a dog's tail, right? It's going to be going up and down depending on what today's price action is compared to the last, in this case, 14 bars. With respect to, is today a gaining day or a losing day? So that can give us some ideas if we watch the RSI on each day, especially that live tail on the daily chart, whether it's pointing up or down. That can give us some insight as to whether there's some hidden like weakness or hidden strength. In the case of, should we jump in on the third bar? If you see the RSI flat or even tilting down, that's giving us some hidden ideas that maybe this rally is a temporary in response to kind of the Fed news and the Fed rhetoric, rather than, something with some strength and momentum in it. So I wanted to turn people onto the RSI. And then there's 2 other indicators. And I look at these 3 indicators that I'm going to give you, RSI being number 1, kind of in parallel at the same time. So the other one, so I just switched over to the SPY, right? This is the ETF that perfectly mirrors the S&P 500. And this has a volume measurement, as you can see here. So I want to add 2 more indicators here, and I'll show you where on Thursday I got kind of a red flag about the current uptrend. So I'm going to add on balance volume, and I'm going to add accumulation distribution with respect to volume. Now, these 2 indicators are very close to each other. They basically take price action, what is the price action, and they multiply it by the amount of volume, so that you kind of have, if there's no volume that day, then you won't get as significant a move in the on balance volume and the accumulation. Whereas if you have a lot of volume, which usually means that traders are validating the price move, then you'll get a bigger move in the on balance volume and the accumulation distribution with respect to volume indicators, these two down here. But here's the scoop. And you might say, well, if they do the same thing, why would you have them both? Because they look at price differently, right? The on balance volume looks at price with respect to the previous day close. So, in other words, the on balance volume takes into consideration your after hours and your pre session traders. Whereas the accumulation distribution takes into consideration the full-time traders that are there during the proper trading session only. So they go and calculate what the price action is from open to close. So again, looking at that live tail on Thursday, here was Wednesday's close on both of these. And on Thursday, the on balance volume, and actually I think yeah, I got that right. On balance volume from the previous day close shows that everything's good to go. Even the RSI showed that there was momentum, although it was a little bit more on the flat side. But my accumulation distribution with respect to volume said that the traders of the day were calling this a tired or a weak move, right? And so, unless all three of these agree and say things are strong, or if you're looking on a certain day to short the market, meaning you want to see weakness, unless they agree, I might, raise a red flag and not place my trade for the day because these guys are looking kind of at the hidden underpinnings, not just at price. So a lot of times, especially beginner traders just look at price and they're like, "Oh, price is going up, price is going up, price is going up." But when you start to factor in momentum in the case of RSI, as well as volume weighted price that the individual traders, the ones that matter, the after hours traders versus the session traders, you might get a whole different insight. So I always make sure that in addition to the price action being what I want to see, that I also see, the RSI on balance volume and accumulation. And that's why I knew that Thursday and then today even more, we've got some weakness telling me that the draw up on Tuesday and Wednesday might be short-lived.